Happy Saturday, everybody. Kamara Yellis here. This is the Finance Rebel Show. And as always, it's a Saturday. So on Saturdays, we do our wealthy conversation segment. And today we are going to be talking about portfolio management. So today we're going to be talking about portfolio management, just the basics. I don't want to bore you all, but I think this will be important for everyone who is in the stock market or thinking about investing into things like stocks, like real estate, even businesses. Portfolio management isn't just only a term or a practice that covers the stock market or investing. It covers a lot of things, even an artist, right? If an artist has a work of portraits or drawings, that's their portfolio. If I see my man Grim is on here, if a DJ has a collection of CDs that they put out there to the world, that's their portfolio, right? And there's different tips and tactics and techniques and strategies on how to manage your overall portfolio. So it goes across the board. So I wanted to talk about that today because I was inspired by my brother over at By the Hood. Everybody go check out By the Hood, but my man Corey over there. So I put up a post yesterday and I said, excuse me, for all you people that are lucky enough to own Bitcoin and Tesla, because they're both at all-time highs, now might be a good time to take some profits off the table. And I think what I said was nobody goes broke from taking profits. And that is an old portfolio management saying that I learned many, many years ago when I actually used to do institutional portfolio management. So I wasn't dealing with, $5 and $10. I was dealing with one firm I worked at had over $2 billion under management. Another firm I worked at had, I want to say a little under $1 billion, somewhere around 800 or 900 billion at the time that I worked at them. But they are now manage over $1 billion, right? So I'm not talking about penny ante money. I'm not talking about nickel and dime money. I'm talking about big money. And when they're managing money, they have a set of rules and disciplines that you have to follow. And that's called institutional investing. So I wanted to share some of my institutional knowledge with you guys because I don't get a chance to do it that often. But today I felt was a great day because we're starting to hit so many crazy things in this world. And a lot of people are seeing a lot of money in their accounts. But what they often don't think about is, again, what goes up will at some point go down, right? This stock market will not be in a bull market forever. And so, again, I get called the killjoy or the unfun guy because I like to state the obvious. Sadly, the markets oftentimes are dislocated from reality. And they don't want to think about what happens next. So it's almost like that crackhead that's been high for so long and they think they're never going to come down. And at some point stealing somebody's stuff to get more money to get back into the market or get more crack. Sorry about the crack references, y'all. I was about to say I'm a crack baby. I am not a crack baby. My mother loved me too much for that. But I am from and of the crack era. So I've been influenced by my environment. So that's one of the things I think about to give you an analogy. And I think many of us can understand that analogy because probably all of us at some point and some time have had some kind of dealings with a crackhead. And if you cannot think of a crackhead, the best crackhead ever, or the best representation of a crackhead ever, is Samuel Jackson when he played the character Gator. And it was a Spike Lee film, and Jungle Fever, when he said, "Mama, I'll do it." And she asked him, "Where's the TV?" And he said, "I smoke the TV," right? So a lot of times people get hopped up on their emotions and they get going, but they can't see anything else. So oftentimes, excuse me, let me grab some water real quick. Oftentimes in my professional life, personal life, because it seems like they don't stop. There's no boundary between the two. I often try to play the voice of reason at times because I do look at my job, my position as one of stewardship. And so I try to be helpful as much as possible. But again, when I kind of state the obvious, like, hey, get ready because this isn't going to last forever. People always say they either accuse me of being a hater or accuse me of being a killjoy or accuse me of being no fun. which are all not true. But I guess in that context, maybe it is a little bit true, maybe. But it's all good. So I wanted to talk about some of the things that I had to do professionally when I used to work in institutional money management, which I was working with big banks and professional money managers. That's what I wanted to talk about today. So I'm not going to be on too long, and I am here early, as I was saying earlier, because I have a board meeting trying to do my community duty with the Philadelphia Association of Black Journalists. So bear with me. I appreciate you all being here so early. Y'all got up early. Y'all know the regular scheduled time is noon on Saturdays for the Wealthy Conversation segment. All right, so let's get into it. Has anybody been paying attention to the market? I'm sure y'all saw all those weirdos stomping the Capitol, but it is what it is. We'll talk a little bit about that in a second. All right, so listen, the S&P 500, as we do our market check, closed at 3,824. Okay, 3,824. It was up week to date, 3%. Year to date, it is up 1.83%. So starting the year off in a positive area. Oil. This is definitely something to keep an eye on. This is going to start hurting us in the pockets really, really soon. Oil, $52.73. $52.73. That's what it closed at today. And again, it was up week to date 11%. All right, year to date is up 8.9%. Why is oil running? We're going to talk about that in a minute, but just know I don't think oil is going to go back to the $30 price range points that we had previously in the year. And last year, that was sweet, kind of. But the dogs are out the gate. The dogs are out of the gate. All right, so gold, $1,849, closed at $1,849. All right, up week today, 4.8%. Down, excuse me, let me retract that. Gold at $1,849 is down 4.89% for the week. All right, and down 2.78% year to date. So gas is down. What am I talking about, y'all? Gold is down, oil is up, stock market's up. Why? Well, we saw what happened on Wednesday when we had that yellow-bellied, or should I call him orange-bellied coward, make those announcements to get his people riled up to storm the Capitol. That didn't really phase the market that well, because you have to remember the market is a forward-looking operation, all right? It's usually looking to see how well the stocks that are in the market, how well the businesses, right? Forget about stocks, how well the businesses are going to perform in the future. Now, I think there's a bit of a dislocation there. I think people in the market are smoking a little bit of crack, especially some of those folks, but it is what it is. I tell people all the time, the stock market is probably the greatest representation of human emotion ever seen, right? Because you can get to see it. You can get to see the fear, right? That really pushes human emotion. And you also see greed that also pushes human emotion. It's a part of, not sadly, it is what it is, but it's a part of the human experience. People are fearful. People are greedy. That's been existing since the beginning of time. You just get to watch it every day via the stock market. So you can see it. All the times I don't think people really process it though in the way that it should be, but later for that. So again, they stormed the Capitol. They weren't happy that that Biden got announced that he won legally the election, and many of those folks lost their minds. Now, many of them are going to jail. A couple people died. I'll be honest, y'all. I am never one for, how can I say this, to celebrate loss of life for anybody. But I can't get behind being sad for them either in this context. I mean, one guy tased himself in his gonads. That's kind of his fault. The lady got killed. That's kind of her fault. Again, I don't think it's ever good, but when you do stuff that's just so atrocious, I don't have any empathy or sympathy for the folks down there. But again, the market kind of shrugged it off. It is what it is. However, the president is now being installed on January 20th. It's clear All the ranks in the Republicans are basically saying we got our back kicked in, so we got to capitulate and get things in order. The vaccines are en route. That's getting everything done. We're getting some stability around politics, or have gotten stability in politics. However, side note, there is this warning. They're saying this coming Wednesday, September 19th, that these Proud Boys, KKK, I call them cowards, are going to be storming the capitals in every state in the country. So if that's true, I hope it's not. Just act accordingly. Y'all know what that means. Act accordingly. All right. So the world's getting back to a more stable place. Outside, it looks like it's going to be opening sooner, maybe. If we can get these vaccines en route. One thing we have to think about also is that new strand of CV-19 that was in UK is now here. I know we had the first case in my home state, Pennsylvania, this week. We've had several cases on the West Coast and the Midwest as well. So they're saying it's not as lethal, but the spread of it, or the infection rate, is more disastrous, or more, what's the word I'm looking for, y'all? It's more infectious. So that could throw a monkey wrench in this quote unquote positive economic and stock market growth that we're starting to see. It's not quite there yet, right? Because we also saw unemployment numbers were a bit more higher than most anticipated last Thursday. So you just got to keep an eye out for that. But again, gold's falling, right? Because we're starting to see stabilization. Gold is that, remember I told you about that safe haven asset. Somebody said to me, Kamari, what in the world is a safe haven asset? I never heard that before until listening to your show. So listen, y'all got to tell people to watch my show, because I'm putting y'all on game. Y'all know that's the word now, right? We run a free game. So if we putting on free game, then that's like, it's golden. Sadly, a lot of people out here in social media land are trash, but again, that's another thing put aside. But yeah, share this out with people and let them know, because again, the whole goal of the show is to help people increase their financial IQ. So I try to make money simple, easy, and fun. I know a lot of times people complain that we didn't learn about this in school. I actually am a big proponent of not teaching money in school, personal finance, personal literacy in school, but that's again another conversation. If you see the likes of some of these so-called educated people from public schools and what they're doing now, it makes you wonder what they would do if they got some quote unquote financial literacy education from public schools. Could be really dangerous. I know many of y'all probably disagree with that, but just think about it for a minute. All right. So again, it looks like outside is open up unless this new strand of COVID gets really, really busy. It looks like, people are starting to take their cues. They're getting happy because we're seeing Tesla and Bitcoin running. And again, I am doing this segment today because I got inspired again from my brother Corey over at By the Hood, because Corey and I have been debating about Bitcoin for like the last 3 years. So the last time Bitcoin was in a bubble, guess who said it before it burst? Me. And I don't say that, like, I am not the guy that likes to say, I told you so. But I am the guy to say, hey, watch out. There's a pothole right there and you might fall in and break your ankle. I don't want nobody breaking their ankles, because when you break your ankles in money terms, that hurts, right? And so most of my audience looks like me. We're all Black. We ain't got time to be losing no money on no nonsense. So anytime you see everybody running towards something, be careful. So I know many of y'all follow some of my posts on Instagram and Instagram and Facebook. So I put out a post. This is not the post that I'm talking about with Corey, but it's another post. I made $158 off of my quote unquote Bitcoin experiment. So I've invested like $45 on that, right? So I'll put it up in the post. It's $158 now. It's worth $158 now. So that's like a 300% return. And so I said, should I sell or should I hold? Not one person said to sell out of everybody. Hey, Rich, I see you out there. Good morning to you. I'm not trying to be hurtful. I'm just trying to say, yo, 5-0. I think we from the same area, Rich, in the same time frame. And so when we say 50, we know what's up. And so a lot of times you planning on losing money at 50 roll through. And I ain't talking about the rapper or 5-0. So a lot of times, I'm just trying to be the warning. I'm the lookout. That's it. Clear and simple. That's it. I've been doing this for over 20 years. Worked in so many different segments of personal finance. It's crazy, from tax to accounting to institutional investing. So I've seen a couple of things, and I don't say that to brag. I'm just saying that I paid my dues. That's all. I paid my dues. So again, I expect the market to continue to do good. The only way I think it doesn't do good again is if COVID really gets crazy on this new strain. So that means oil prices are going to keep rising because people are going to start moving a little bit more, right? All of these things factor into stock prices. All right. Warren Buffett famously says, when you are buying a stock, you're not really buying a stock. You are buying a business. You're buying a piece of a business. So you're now a business owner. The performance of that stock is ultimately going to be linked to the performance of that business. So a lot of times we think the stock is just, up one day, down another. And in the short term, that's true. But over the long term, if you look at the stock price and you look at their revenue and their sales and their profits, a lot of times they move together. Most times they move together. Now, again, it's an operation of humans, right? It's an, I don't want to say experiment. Well, it is an experiment to a certain degree, right? But anytime you get humans, I don't know what's up with my throat today, y'all. Anytime you get humans involved, you're going to see weird stuff. So just keep that in mind. So some days, some months, even some years, the market will act really, really weird. But as Warren Buffett says, these are not my words. If you buy good companies for the long haul, because y'all know this isn't the place for the traders. This isn't the place for the short-term folks. This is the place for long-term beginners. Over the long haul, if you buy good companies, your stocks will tend to do good. Your investments will tend to do good. All right, so real quick, I'm going to jump in, say my good mornings and salutations to everybody, and we're going to jump into the main topic. So Adrian, I see is here. Good morning, Adrian. Remember, y'all, I am broadcasting live on Facebook, Instagram, and YouTube all at the same damn time. All right, Douglas, what's up, Douglas? How you doing, sir? Yep. It leaves up for me. What's up, Rich? Don Johnson, how are you? Don, I see you everywhere, man. I just did an interview on the Early Life show, and I saw you over there, Don. I think it drops on Monday, so you'll see me over there. Oh, man, my boss is here lurking, Mr. Ernest Owens. What's up, President? How you doing? Now, Ernest is the reason why I had to get up extra early this morning, y'all. So blame Ernest that my scheduled time changed. But it shows that I'm committed to y'all. So I got up extra early to do this. Thaddeus Green, my man, I want to salute you for a moment because I put out a post, and I think you're the only one that saw it clearly. My post said, in relationship to these knucklehead weirdos that crashed the Capitol on Wednesday, I said, what would happen if these weirdos came to our hood? Would you be prepared? And everybody said, yeah, and they pulled out their ammo, and this is on my personal page. They pulled out their ammo, and they said that, they strapped up and ready to go, most of them. And Thad was the only one that said, as an individual, maybe, but as individuals, we'll lose. And I'm paraphrasing his. So if they were to come to our communities and we were to fight them as individuals, we would lose. Why would we lose? We would lose because if y'all been following the KKK for many, many years, if you've been following the Proud Boys and all those people of that ilk in these militias, they have real arsenals. They don't just have 20 bullets, y'all. They got 2,000 bullets and more. They don't just have one gun. They have 100 guns, right? And this isn't just them, right? Individually, it's a group. They also train in formation. So if anybody, I study military history. Like, I love to look at the wars because I think the wars in military history give you great strategies on how to overcome certain things in life and how to just overcome life in general, just to be clear. They are training in how to be formatted and how to be disciplined. I don't think they're the toughest people in the world. I don't even think they're the smartest people in the world. But Malcolm X said, it's not the fact, what was his saying? Malcolm X said that we're being out-organized. I can't think of the exact quote, but it wasn't that other people, and again, I'm talking to my folks, black folks, it's not that the other people are smarter than us, that they're better than us. They may be a little more well-equipped than us, and they are more organized. So we're being out-organized. So in my opinion, we have to start getting back to family and community in order to deal with the problems and our enemies that are still facing us. I'm not going to go too deep into politics, but I have to say this. Some people hate when I say this, but when we go back to 2016, when Trump first got elected, roughly 50% of the voting public voted for Trump. I know Hillary had 3,000 more votes, but when we're talking about millions and millions of votes, 3 million is kind of immaterial when we talk about the whole thing. So this dude had roughly 50% of the votes. So I extrapolate that and I say, well, 50% of the country is racist. I know people don't like when I say that, but I don't see anything contrary to that. Now, sure, I have good white friends, right, too. Now, everybody white isn't racist, right? That's cool. But what about the ones that are? And oftentimes the ones that are not racist are not stopping the ones that are racist. So at the end of the day, we're still in the same boat. So we can talk about fighting these issues from an individualistic standpoint, or we could really start heeding the lessons and teachings of Malcolm X, start getting our stuff together, start organizing, start training, right? Because it's one thing to have a gun. It's something else to use a gun. And by the way, if you are within 20 feet, let's say you're within 20 feet of someone that has a knife and you have a gun, right? Because I hate the saying, don't bring a knife to a gunfight. People think they're so slick. We say these things over and over again and they become gospel, but they're just stupid. So if a person is within 20 feet of you and they have a knife, they can kill the person with the gun because it only takes about a second or two to close distance that far out. So y'all got to start studying this stuff. Again, I'm not trying to be, a killjoy. What's up, Showbiz? So Showbiz will tell you he's one of the ones that says I'm a killjoy. One of my best friends. Right. But I am trying to say, hey, we got to be ready. People were really shocked by Wednesday. I wasn't. This is what they've been doing. They might have not stormed the Capitol like this, but this is what they've been doing. And so if this is their nature and this is what's been happening, why wouldn't they do it again? Even if it's more relaxed or more aggressive, it's still some form of it. So at any rate, Black folks got to be ready for this. And I just say I was really glad that Thad said what he said, because again, he said, we're looking at things from an individualized perspective. And I put out another post about Americanism. Americanism is really killing the Black community. And why do I say that? It's because Americanism is rooted in individualism. Black folks don't really have the luxury of just being straight individuals. Now, yeah, we can be individuals. We should all be individuals, but we also have to recognize the value of the group. So I'm not going to go on too much longer yet. I'm going to say my hellos, and then we're going to get to the topic, which is Portfolio Management 101. Now, y'all watching the Money Show, y'all not, probably some of y'all new here, and y'all not used to me talking this politics and social issues. I talk about it all because it all goes into the Black experience. And if I'm being true to myself, my audience is Black, my people are Black, my clients are mostly Black. So all of these things coincide and they are linked together. You can't separate one from the other. So I talk about money. I talk about politics because politics is about the allocation of money. You can't separate politics and wealth. And yeah, I'll talk about crazy wackos who storm who stormed the Capitol because they're acting like spoiled toddlers, having temper tantrums, because at some point they could affect us. Let's not act like we ain't still getting lynched, y'all. Just to be real clear. And I'm not trying to be bombastic or dogmatic on a Saturday morning. I'm just spitting the facts. So I appreciate you for that, Thad. Matt Maddox, how are you? Good morning, good morning, good morning. What's up, Christy? My sister right there. Rich said you ain't had to pull Tulip Manning like that. Listen, Richard, I'm calling it like I see it. I said the same thing in 2017. Now, I don't think the dynamics with Bitcoin is the same as 2017 now, but we can't ignore the hype and the mass hysteria that's going on. And we can't ignore that Bitcoin is a safe haven asset, or perceived to be a safe haven asset at this point. And many people are jumping into Bitcoin because they're afraid of this nutcase that's been living in the White House for the last 4 years. All right, so let me get through my lows because I told y'all I got a tight deadline. I got a board meeting at 11:30, y'all. What's up, Divine? How you doing, bro? Mark Daniels, my man out in Bitcoin. But would you agree that Bitcoin is here to stay? Yes, Bitcoin is here to stay. Blockchain is the thing that runs Bitcoin and Ethereum and all the other cryptocurrencies. That's here to stay. I'm more concerned about blockchain than I am Bitcoin because I feel there are going to be more coins that come out. And I'll say this, Bitcoin probably is here to stay, Bitcoin or Ethereum, but who knows? Something else may come and knock it out the box. Juanita Jenkins, how are you? Yep, mathematics is the truth. Yes, sir. Karan, hey man, stop putting out your secrets online like that. He says I'm way more dangerous with my blade than with the gun. And he's going back to the point of the 20 foot when people say stop bringing knives to gunfights. Listen, last mini rant. Can y'all stop repeating some of the dumb shit that's said on the internet, y'all? A lot of it has no thought behind it. A lot of it has already been shown not to be true. Do a little bit of research, just a little bit. I ain't trying to get on y'all, but I'm just saying. All right, so Adrian says we're out organized and outgunned. This isn't the last time we're going to see the Capitol Coup crew. Coup crew. They're here to stay and could cause havoc with or without Cheeto. That's a fact. That's a fact. Right, close quarters combat. That's right there. Michelle, just buying anything and it goes up all-time highs every other day. When does the bubble pop? We got in La La Land. Yeah, I would agree. I would agree. Listen, I don't trust. You can't time the market. People that say they can't. Not consistently. You might get lucky here or there, but you can't do it with inconsistency. So it'll pop at some point. Hopefully, it's nothing really, really bad to make it pop. Like for example, 2008 popped. We had a pop 2007, 2008 because people just got tired of buying mortgages. But they've been predicting that for quite some time. But usually when you see things like a war or like COVID, or some other kind of major destructions, those are some of the things that really cause these recessions. That's not the case this time. Well, it is the case this time with COVID, but it was already going to that. All right, so Adrian says this will probably be a good time to buy more gun stocks. Yeah, I know. Again, my brothers over at Buy the Hood, they've been talking about that. Smith and Wesson and a few others. They brought some calls, and again, I'm not going to talk about calls because this is for the basics of folks, the basic investor, the newbie investor. But yeah, you might have missed the rush, Adrian. It might already be up right now. I haven't looked at it. I will. Matter of fact, maybe I'll do. Is it just that? Is it too late to buy gun stocks? Yes, digital currency is here to stay. Yeah, Richard, you're right. Me and Jim and Corey, we talked about that yesterday. Matter of fact, people get their facts from means and they're scared. Yeah, listen, y'all, just do a little research. Do a little research. Hey, Denise James, good morning. How you doing? Homegirl Chrissy joined. How you doing? Skinny Dollhouse, how you doing? Mr. Yake, I hope I'm saying your name right. Amber Styles Cuts, how you doing? Scorpio Gang, what's up, cousin? How you doing? The book, so Denise James says the book Small Great Things is a novel that looks at the issues of white supremacy, intentional preparations, many of which we saw evidence of this week. Yes, we have. We did seek evidence of that. That book, somebody do me a favor, put this in the chat. Corey, my man, I was just talking about you. All bad stuff too. I'm playing. So somebody put this in the chat for me so I can look this up. Because Denise James says this. By the way, Denise James is a member with me at PABJ, who's done a lot of work over the years. So thank you for that. But the book of small great things. So she said, take a look at the book of small great things. A way to get prepared when dealing with some of these white supremacists out here. All right. So Rose Quartz Ratchet, how are you? Saxon Mart, how are you? Dion, how are you? Yes, I'm sad it's true. Some of that got jumbled, so I can't see it all. Yeah, so Rose Quartz, yes, this is being recorded. This is definitely being recorded. Smart and Tidy, MB Fit Page, how are you? Italian Beauty, how are you? That Brooklyn One, how are you? J Nice's World, how are you? Tay Digital, Fab Starlight, Canary Ice, Ring Park. What's up, Ring? Low Key Poppin', Wale. I can't say the rest of it, but how you doing? Ray Fat Boy, how you doing? Kay Landers, how you doing? How you doing? How you doing? Listen, I am also broadcasting live on Instagram, Facebook, and YouTube, so you can watch anywhere you like. All right, so Adrian Anderson says, I brought my gun stock last year. Salutes to you. Very, very smart. So Don Johnson says, Aisha Sheldon, shout out to Aisha Sheldon, and Courtney, shout out to Courtney, had a very interesting conversation on Twitter on should BOBs advertise as Black owned. I think it depends. I don't think there's anything wrong with it, though. And I think, so here's the thing. You got to understand what your audience is, and I'm going to get into the main presentation because I can't rock with y'all all day. What's up, Dwight? Mac Meyer, how are you doing? But some people, like I have some clients who intentionally hire white folks to be white facing, front facing, and they do better business, even with Black customers. Riddle me that one, folks. Riddle me that one. But it's real. So I can't necessarily say it's wrong or right. I get it. Again, when you say the white man's ice is colder, the perception of folks saying the white man's ice is colder, that's real, y'all. That's real. That's real. So my man Corey is in the building. Actually, I should have brought you on today, Corey. Corey, I want to get you on so we can talk about crypto and digital currencies too at some point. But I said today's show was inspired by Corey. Corey Campbell over By the Hood. So make sure y'all check out By the Hood. I've done several podcasts with them. We actually are partnered up and we do the Black Wealth Project every Sunday at 7 p.m. But Corey and I have been battling over Bitcoin for years. It's been fierce. He's winning right now, but I kicked his butt previously, like in 2017, right? But yesterday I should find the meme actually. I put up everybody that owns Tesla, the holders of Tesla and the holders of Bitcoin should practice some taking profits right now. And so Corey came back and says that my hate for Bitcoin has no bounds, something like that, right? And I tell y'all, I am not anti-Bitcoin. I am asset agnostic. I don't care. But there's certain things that you can't ignore. And Bitcoin's price being up is undeniable. All right, yeah. So here we go. I found a clip. Let me put it up, y'all. Let me put it up. Put it up real quick so I can give y'all some context. Give me 1 second, un momento. All right, so let's see. Can y'all see that? So I said I would suggest some of you lucky Bitcoin and Tesla holders to learn from the tulip crisis and take some profit sooner than later. And so Richard mentioned the tulip crisis. The tulip crisis happened like, I want to say like the 1200s, something like that, where all these people in I want to say in the Netherlands were buying tulips for whatever reason. They kept buying. And then there became a shortage of tulips. And then everybody put their money in, lost it, or a lot of people lost it, right? Especially those late stage investors. Now, people were borrowing money to buy tulips. People were, leveraging their monies and their homes and their businesses to buy tulips. A tulip, y'all, a flower. Now, this is way back in the day. This is before internet and Instagram. But it caused this massive bubble. And a lot of people lost their shirt in that. Now, to Corey's point, I did add a little extra spikes on it, right? Listen, we talking about money, y'all. So I try to make money fun, easy, plain, right? I try to make it fun because people consider it boring. Now, I don't think it's boring, but a lot of people consider it boring. But I put Pepe Le Pew on there. So I used to watch a lot of Looney Tunes cartoons. And y'all know Pepe Le Pew was probably actually the first, he should have probably been the first Me Too victim. Because this dude was a serial sexual assaulter. But I put him up and he just walked by the tulips. He's walking by tulips and his funk, because he's a skunk, killed all the tulips. And an insect, I think it's a bee that was inside the tulips. And so again, matter of fact, you can see Corey's response. He says, no bounds for your hate of Bitcoin. You said the same exact thing 3 years ago. Tisk tisk. Now, I wanted to say, but I ain't had time for you yesterday, Corey. I wanted to say 3 years ago I was right. And Bitcoin was absolutely in the bubble when it touched 20,000. Now it's at 40,000. So do y'all think it's in the bubble or not? I also said that when I put up the other poll, let's see if I can find that other poll. Here we go. Right? The Bitcoin I own right now, I did an experiment. Now, to Corey's point, I was talking trash, not on this, but the genesis of this post, the genesis of my Bitcoin experiment was to talk trash. Because I brought $20 in Bitcoin and it was at like $15 for the longest time. However, that 20, I put in like another $25 and it's now worth $158. Now, I asked everybody, should I sell or should I hold? Should I sell or should I hold this Bitcoin? Unanimously, people said to hold. Everybody. I didn't get not one sell recommendation from the audience. Not one. So what do they tell you? When you get a whole bunch of hubris and a whole bunch of excitement, something's wrong. Everybody's all in concert. Now, it doesn't matter if they are sophisticated investors, educated investors, none of that matters. Because at the end of the day, the public runs the pricing, right? I explained to y'all how stock market pricing works, how Bitcoin pricing works. It's all an auction. It goes to the highest bidder at the time of the sale. So everybody's saying to keep Bitcoin right now. I'm thinking about selling. But going back to Corey and how he inspired today's show is because I'm from institutional background. That's my training. So a lot of times, again, like I said earlier, people think I'm hating. It's not me hating. That's my discipline. That's my training coming through. And so anytime you see massive gains in a position, you tend to sell off. You take some profits. But let's really jump into it, right? So I want y'all to understand what portfolio management is. Now, all of us are practicing some form of portfolio management, whether you realize it or not. All right. So what is portfolio management? So I'm going to pull this up on the screen from a resource that I use, or I think that should be used quite often. It's Investopedia. So I would recommend this all. Go to Investopedia when we have questions, about definitions and certain terminologies and things like that, because it's pretty unbiased. But let's look at the term portfolio management. How do you break it down? How do you define it? What is portfolio management? Portfolio management is the art and science of selecting and overseeing a group of investments that meet the long-term financial objectives and risk tolerance of a client, a company, or an institution, right? Client, company, institution. Portfolio management requires the abilities to weigh strengths and weaknesses, opportunities, and threats. Now, if y'all realize what they just said, they just gave you a breakdown of SWOT, a SWOT analysis, if any of y'all have ever heard of it, right? They talk about that in business. So we're looking at opportunities and threats across a full spectrum of investments. The choices involve trade-offs from debt versus equity to domestic versus international and growth versus safety. Understanding portfolio management, professional licensed portfolio managers, that's not always true, work on behalf of clients while individuals may choose to build and manage their own portfolios. In either case, the portfolio manager's ultimate job is to maximize the investment's expected return with an appropriate level of risk. I'm going to read that one more time, y'all. The ultimate goal is to maximize the investment's expected return with an appropriate level of risk exposure. All right. Portfolio management may be either passive or active. I'm going to do a show on passive or active, but not today. All right. So passive management is a set it and forget it type thing. Active management involves people trying to beat the performance of the market or index. So when I was an institutional, I was an active manager. All right, so I'm just going to read these takeaways and then we can get on with it. Key elements of portfolio management: asset allocation, diversification, rebalancing. What is rebalancing, folks? Active portfolio management, passive management. So we talked about that already. All right, so this isn't me. This isn't me making these things up. So I always like to present a resource. I probably get that from hanging around my journalist friends. And sadly, not some of those so-called journalist people that just post what their opinions are. That's not journalism. That's just celebrity culture run amok. All right. So when we think about portfolio management, again, you have your objectives. What's your time horizon? Who you're investing for, right? When you talk about a personal, a company, or institution, they all have different goals and objectives. You all have different goals and objectives. So I'm talking to you all today. So we're going to put it in your spectrum, in your sphere. What are you investing for? Are you investing for retirement? Are you investing for your child's college program? Are you just creating a generational wealth fund, right? So it's not expected to be used in your lifetime. It's not for your lifetime. It's for your children's children's lifetime. All of those generations and lineages linked into that. You could have different funds for that. So with having those different objectives, those different time horizons, you will manage your money differently. So I just said your generational wealth fund, right? What's the time horizon on that? Is that 5 years? Is that 10 years? Is that 100 years? So typically your average, when we're clocking generations, we're talking like mother to son, then mother to grandson, then mother to great grandson or great granddaughter. So those are 4 years. And those usually kind of come in 20-year increments. They're usually kind of judged out in 20-year increments. And so if we're looking at that, right, we're saying, all right, well, we want to do our children's children. And so me, if I'm thinking about my children, I have 3 children, I have 1 grandchild. So I have 2 generations to account for already. So that's at least 40 years if we're doing it like that. So I can start buying stocks, let's say for my grandchild and beyond, with a 40-year time horizon. And this is just all, I'm keeping it simple, y'all. I can get way more complex with this and sophisticated, but it doesn't need to be. So let's just say 40 years. So I'm looking at 40-year time horizon. What stock market or what stock investment do you think I could buy over the next 40 years that will do good? If I would have bought Sears or Toys R Us, would that have been good a couple years ago? If I would have brought Tesla, would that be good? I know y'all love Tesla. Remember, this is not investment advice, y'all. Past performance is not an indicator of future results. This show, this platform is all for entertainment and educational purposes only. Don't ever say Kamari recommended an investment or a stock to me, because that's a lie. It's a bold-faced lie. All right. So when we're looking at building out these portfolios, what are we doing in mind? Now I know most of y'all aren't thinking about that. Y'all not thinking about time horizon. Y'all not thinking about, let's just take the different characteristics of stock, right? Some stocks move more violently than others, right? Some stocks have relatively low volatility. Some stocks have high volatility. Sometimes I've been talking to y'all a lot about correlation, right? Some stocks are more correlated than others. Now, I don't know if y'all been paying attention when I'm talking about correlation, but I've been kind of doing it because I know correlation gets a little tricky, but I've been trying to sneak it in on y'all because it's important. It's important. You don't want to put all your eggs in one basket, right? That's the point of diversification. But the way diversification is promoted and taught, I think, is a little whacked out. Because at the end of the day, diversification really is a wealth conservation tool. Most of us are in our wealth accumulation or wealth management phase. Now, I've talked about the phases of wealth before. I'm not going to go into them today, but if you don't know, just put in the chat and we'll revisit that. But I'll say this: diversification is more so for people that have money. Most people that are accumulating wealth and managing wealth don't have as much money. But when we're factoring all these things, right, when we're building out a portfolio, we have to think about them. How is that working? How are we working for our goals? Do we know what our goals are? Do we know what our objectives are? All right. And then so bring it back to Bitcoin. How many of y'all have a time horizon for Bitcoin? How many of y'all have a time horizon for Tesla? And if y'all are really being honest, right? How many people bought Bitcoin and Tesla and had absolutely no idea what the hell it is? Like, if we really, let's keep it funky, y'all. Right. So this isn't for the educated out there. And that's no diss to anybody, right? Because we all have our phases of learning, right? We've got to start at kindergarten and we got to begin. Many of y'all are in pre-K, but y'all acting like 12th graders. And so that's why I say some of these things. And y'all know what happens when kids start acting like they're grown. Somebody usually gets in trouble somehow, some kind of way. They out of alignment. They not in their place. All right. So, a lot of times people don't understand. A lot of times people don't understand those things. And so that's why I put out that post. But let's break through it. So when I was a portfolio manager, and I guess I still am to a certain degree, but when I was a portfolio manager, what I had to do, I had to manage a portfolio. And what was really wicked on my end is that I was expected to have positive performance every month. And that goes into the benchmarks and all that. And it's a whole pain in the butt. I'm not going to go too deep into that, but that was my expectation. And I had the way they benchmarked my performance to see if I was actually performing. We had this customized blend because what I was doing was more kind of hedge fund esque. But for this conversation, let's just say my job is to beat the S&P 500. That's the rubric to say if I got an A, B, C, D, or E in ranking my job performance as a portfolio manager, right? Because again, portfolio management is how do you stay disciplined and how do you measure up that discipline and how are we judging ourselves and holding ourselves accountable. So every month I had to go before my investment committee and reveal my results. Some months I got my butt kicked. Most months I won though. And this was during the time of that 08, 09, 10, 11, and 12, which was like crazy times in the market. Up and down, up and down, up and down. And so I had to show them what my rules were, right? How was I rocking? How was I picking? What was I looking at? What was my maximum holding in each one of my positions? So for this conversation, let's say I was only able to have 20 holdings and I am to pick the top 20 holdings that fit in alignment with my client's time horizon, right? We just talked about time horizon, my client's risk tolerance. Now, I didn't have to deal with that too much because I had total discretion. I didn't have to call my clients up and say, hey, I'm going to do X, Y, and Z. I wasn't a stockbroker. For the record, y'all, stockbrokers are just salespeople. But I was the actual investment advisor. So the money was already there. I had full discretion. I got to put it where I wanted to put it, when I wanted to put it, how I wanted to put it. All right. So then the question would be as well, how do you go into your positions? Usually I would take on a 2% position out of no more than a max 5%. Why? Why don't I just go all in? And let's say I have $100,000 in this portfolio. So that's roughly $2,000. My max position would be 5%. Why would I start at 2? I would start at 2 because I had such a short time horizon in which one I was being judged upon. 2, if that position went against me, I would have less of a loss. If any one of y'all follow Warren Buffett's like number 1 and 2 rule is not to lose money. First rule in investing, don't lose money. Second rule of investing, don't forget rule number 1. Right? So that's the discipline that I had to adhere myself to. And then so as we started to look at these different investments, so let's say I have my 20 investments and I start off with 2%. And as I like them and as I study deeper into them and get more acclimated with them, maybe I go to 3 or 4% or even a full 5 if I'm really feeling good and giddy about it. But there must be something to substantiate it. And it's funny, I just found some of my old records from when I was institutional, my write-ups. At some point, I'll scan them up and I'll do a show on them because I had to do a write-up on every investment that I made, on the loss I took or the gain I made, why I invested in it, why I sold it. I had to do that every time. So if you're really serious about investing, And I also learned that in college too, when I went to the great Temple University. One of the classes I took was I can't think of it. I think it was options, derivatives, and something else. But we ran these mock portfolios, and my professor made us write up our rationale for buying in to these portfolios. It's a great training. A lot of people won't do that, but it helps build discipline and it helps you think about things. Courtney says something. I think she might have been quoting Erica Badu, but she says when you write stuff down, it really gets real to you. That's a living case proof evidence of that. So I would have to, again, defend my positions. Out of those, let's say 20 positions, I had to tell them why I did that or why I didn't do that, why it lost, why it did not lose. So it's kind of, I've been institutionalized, y'all, to a certain degree. When your position, let's say it exceeds, let's say 5%, right? Because that's my max. You automatically have to look at it and say, hey, this stock is up. Should I sell? Should I take profit and redistribute some of the winnings, some of the profits into other investments that I like? But my premise, my structure, my guidelines said I'm only supposed to have 5%. And anytime I go above 5% and I want to stay, I need to have a really, really good reason. But typically it should call for a rebalance. I should be rebalancing, taking cash off the table, taking profits off the table, right? And so if I'm taking profits off the table, I'm making sure I'm making money. I'm always making money. Now, again, Corey was giving me the business, but that's what me and Corey do. That's our love relationship. That's our love language. We're like, we beat each other up. Corey does more beating on me than I do on him now. So he typically wins. Right. So when I'm looking at Bitcoin, when I'm looking at Tesla, and I know most people haven't thought about any of this stuff, I just said, hey, maybe you should take some profits. Why? Because you probably haven't taken any profits. You have no rationale most times. And again, these are not knocks. These are just things that come into play. You have no rationale. And I would hate to see a major correction come like in 08 or 09 or 08, and you lose all of your gains and you never got an opportunity to cash out at all. And so all that wonderful profit you had, you didn't take it because you're being greedy, right? Remember earlier in the show, I said fear and greed runs the market. It does. Fear and greed is what y'all hear me talk about supply and demand a lot of times. Well, fear and greed actually pushes supply and demand oftentimes, but that's more the psychological and behavioral financial aspects of markets and personal finance. Again, I don't want to nerd out on y'all and bore y'all and put y'all to sleep, but you got to look at that, because if history shows that most people, most retail investors, right? Because I'm only concerned about us. I don't care about the big banks and the big institutions. They can go play in traffic somewhere. Could care less. I care about us, because we are always the ones who are always being abused, raped, and pillaged from a financial perspective, and just kind of left and led astray. They don't care. I'm saying that, listen, if we're going to play this game, and it's not a game, but just using that, if we're going to be in the markets, let's make sure we are in it to win it. And so there's times where you see rapid growth. You have major gains, and you haven't taken any profit, and you leave yourself open. So I'm going to harken back, or I'm going to go back to another one. I got some notoriety when I brought Tilray, which is a medical marijuana stock, a few years ago, and I talked about it and got shared on Instagram a lot and on YouTube pretty decently. So I brought Tilray when it was IPO. Now y'all know I hate IPOs. I always say never to buy IPOs on the day of the IPO. I followed that discipline. I did not buy Tilray on it. Matter of fact, I waited about a month to buy it. So I brought it. Long story short, it ran up to like $300. I sold at around 120. Some people will say, well, Kamar, you missed all out on that other part. I did. And does it hurt a little bit? Yeah, it does. But what hurts even more is that when Tilray hit 300, it dropped down to like Well, right now, Tilray is at like $11. I think I have like 3 or 4 shares still laying around somewhere. Right. So I got out. I got my profit. I got out. I didn't succumb to the greed emotion. Right. It's an emotion. Greed is an emotion. I didn't succumb to it. Why didn't I succumb to it? Because I had discipline and I had structure. The more discipline and structure you have around certain things, more than likely, the more you'll be successful. Now, does that mean you should never retool your discipline? You should never see if it's working? No. But if you've got a process, you got to follow your process and you have to trust the process. I know that's becoming a little bit cliche these days, but it's absolutely true because hopefully that process came out of some well thought out process that I can't use process to define process, right? But hopefully that process came out of some well thought out exercises and experiments, right? Exercises and experiments to give you some type of inclination to say, hey, this works, or hey, it doesn't work, or hey, this is why I need this, right? So again, I was only allowed to hold 5%. So out of that $100,000 of that, because remember we're doing $100,000 portfolio that was $5,000. So if it goes to $5,001, technically I'm supposed to sell that $1 percentage. Now I don't always do that because it's not worth it. And at the time, I think I was trading like my trading costs were like a penny, sometimes a half a penny a share. Now retail folks have no trading fees. I think that might come back sometime later on, but for right now, I had none. So trading costs wasn't the issue, but I had no need to sell. Or excuse me, I had no barrier to sell, but it didn't make sense. So, but if I get to 5,100, 5,200, right? If I get to $6,000, right, I am a full percentage point above my target. Now I got some explaining to do. When I go into this investment committee, they say, your portfolio is out of whack. This is what you submitted to us, and you are now not doing that. Why? And I'll say this, y'all. I was that was probably my dream job. I learned. So before you experience something, you always had these grandiose visions and dreams of things. And I had a great boss that gave me the opportunity to do as black man. But then I also learned that some of the things that I thought were really hot and fancy and great weren't so much. And so I had to go before a bunch of non-black people who were a little mad at my boss. And I got to tell this story one day. Mad at my boss. And then by way of that, they would pick on me. And I had to stand up to that. And I didn't always feel good about it. But I learned a great lesson from it. Nobody is beyond reproach. And so if you're doing something, you should be able to stand on it. You should be able to give a clear rationale, not how you feel, but the facts. And you can sprinkle in some of the feelings that you develop based on the facts, right? Remember, feelings developed based on the facts, not just feelings just because it's how you feel. So, it was rough. It was rough. They felt that I didn't come from the same pedigree as they did. And I'm cool with that. But it just showed in everything they did. So again, when I show these things, when I put up these memes, some of them are jokes. All of them are jokes, y'all, to be honest. But it's also a teaching moment. At least it is for me. Because I'm looking to hopefully have a teachable moment out of these situations. So when I bring Pepe Le Pew walking through the field of tulips, I'm saying, hey, if you ain't got your stuff together, now might be a good time to do it. Just like when y'all got a whooping back in the day. The ones that loved you, not those whoopings when they was mad at you, but the ones that was like, listen, don't put your hand in the daggone electric outlet because you're gonna get shocked. And they smack your hand and they say don't do that because you can get hurt. Yeah, you could die. I'm not saying that's the best way to do it, but you often have to recognize the intention of why it's being done as well. So when I put out these jokes, I'm just saying, hey, don't put your hand in the outlet because your money might die. and I need you to have your money. I need you to have your money so your family can depend upon you. I need you to have your money so your community can depend on you, right? Because this wealth thing ain't an individualistic thing, y'all. It's a group thing. That's something Black folks have missed out often. I think some things are changing now. I hope some things are changing now. I pray some things are changing now. But we got to start thinking about this with a little bit more depth. And I think as we think about it with a little bit more depth, we'll be one more courageous, right? Because once you think about it and you know your why and you step out and you go after it and you hit it, you like, this is what I'm doing. I'm repping for not just me. I'm repping for my fam. I'm repping for my community. But then it's also like, when I do take these risks, because we have to take risks, they're smart risks. At the beginning of this, I said I love to study military strategies. Now, we could have a whole bunch of different conversations, but in theory, right? In theory, nobody's going to send a battalion out to fight and they know it's a trap, because that's suicide. That's just lost life. So you got to be able to see these traps. You got to recognize where these traps are. Sun Tzu says, know your terrain in the art of war. Know your terrain. Again, a lot of us got to know our terrain, because when you go in these terrains, right, and again, linking this up with the military thing, you can go into a trap because you're in a valley and you got enemies up on the hills and they have you dead center and they can just shoot at you. They have the high ground. Clear shots, and you not so much. So again, you got to be able to see the issues before they come. You got to have your disciplines in place before you hit them, right? Got to have your processes in place. I'm sure many of y'all on y'all jobs have an SOP or standard operating procedures. This is the same thing. What is your SOP for your investments? What is your SOP for your portfolio? Right? What's your discipline? If people develop more discipline, people would have more wealth at the end of the day. At the end of the day. That's all I got to say, y'all. That's all I got to say. So I told you I got a board meeting I got to get to on a Saturday. It seems like work never ends. But what do y'all think? I'll take a couple seconds. If y'all got any comments, questions, or concerns, I'll definitely get into them a little bit. If not, I will come back to the comments later on and I'll try to answer them, or maybe even I will do another show. Corey, I just saw this to send you an invite. I'm just about done now. Let's do another one though. I'm sorry. I wish I would have saw that earlier. Yeah, Corey talking about that extra spice. I admit I had a little extra spice just to have a little fun. Listen, nobody likes boring money. Nobody, y'all want me to be like Mortimer Duke? Right. So, all right. So, like I said, I got a couple more minutes. I'll try to jump into some of these. So Don Johnson says, with a 50-year time frame, I'll be buying the S&P. Slow growth, but highly hold there, and we'll still be there for right. And that's the kind of thought process you got to come through with, Don. You know what, Don? That's what I recommend. So Don says, I think you can DCA in the Bitcoin and Ethereum while you learn the crypto market. That's exactly what I recommend to people. And so for the record, y'all, what DCA means is dollar cost average, meaning, so dollar cost averaging is investing the same amount over time. So for example, if I invest $25 on the first of every month, that's an example of dollar cost averaging. So a person can buy Bitcoin, $25, you can do it. I don't have a Coinbase account. I'm not sure if they allow, I'm pretty sure they probably do allow fractional Bitcoin buying on Coinbase. You could also do it on Cash App as well. Matter of fact, Corey has a whole Cash App fund going on over there. All right. So yeah, Don, I totally agree with that. So Eileen, we are not talking about that orange-haired, yellow-bellied coward. And we're not doing that today. I'm only saying that out of respect for you, but I'm not even going to engage in that. All right. So Karan asked why 5%. So 5% was a number for that particular thing, because you have to do the math, right? When you start looking at how much money you can lose or how much money you're comfortable losing, how much can you make back? So the more money you lose, the harder it is to get back into the positive. And so remember, I always had to be positive. That was my mandate every month. And so 5% was like, all right, well, if I lose 5%, because I'm putting 5% at risk, that means that 5% can be lost at the click or the blink of an eye. So if I have only lose 5%, I still have 95% to come back. And I would have to do the math for y'all to really get it, because basically losing 5%, in order to make that 5% up, I got to get 10% to get back to even. Right. So it becomes really treacherous at times. It becomes really treacherous at times. So, people aren't thinking about the downside, right? So I tell people all the times, if you want to know if you're dealing with a crook, they're only typically going to show you the upside, the good stuff. They never tell you about the bad part. But that also plays to human emotion as well. What part? That greed part. People only want to hear about the good stuff, the happy stuff. That guy that comes through and says, baby, I'm going to take you all around the world. You're going to have the finest things, the nicest clothes, the nicest jewelry. We're going to eat out every night at 5-star restaurants. And the lady goes for it, only to find out that this dude was a cracked out womanizer, woman beater. So yeah, you might get all that stuff, but you're looking at all that stuff with a black eye. So then you have to ask yourself, I must do more due diligence. So I don't have to deal with these whacked out dudes anymore. But that's why 5% don't come around. Long term, the process is more important than the initial outcome, good or bad. Yeah, I'm assuming that's a statement. All right, so Maddox12 says, thank you for speaking the truth. I try. I mean, there's no cap here, y'all. Seriously. If any of y'all know me long enough, I have creativity for the jokes and stuff, but some of the stuff these crooks do, I don't have the creativity nor the patience to do. Right. And I'll be honest, right? This real rap, most of y'all are not my clients. I don't charge y'all. So I'm not even doing it for that. And I think my track record will show this. For me, this is greater than the money, y'all. This is community work. At least that's how I see it. So you know what, Richard, I'm glad you said that, right? So he said he had some high interest that he had to pay off. Some Bitcoin went to pay that. So sometimes in portfolio management and discipline, right, if you find a better use of your money, so let's say I had those 20 stocks and I found a better investment, I might sell off a piece of everything to make money to pay off that thing, right? If we bring that same ideology down to personal finance, right? Richard has some crazy debt. So he said, boom, I got this hit. I hit this lick with this Bitcoin. I'm gonna sell off some of that and I'm gonna pay down this crazy ass debt on this credit card. So I get it that he had to make a decision. That's discipline. That though, that takes me to a whole other thing, right? That's one of the reasons why I say you should pay. When people ask me, Kamari, should I pay off all my debt or should I? Let me back up, y'all. I'm going too fast. Should I pay off all my debt before I start to invest? Or should I start investing and then pay off my debt? Or should I do both at the same time? I always say do both at the same time. Now you gotta be in tune with what's going on, right? But Richard hit a great opportunity. He hit his Bitcoin hit, it ran. And he said, I'm gonna go pay off these crazy credit cards. And Richard, I don't know what your interest rates are, but let's just say they 20%. And maybe sold a little bit of Bitcoin. That's kind of like a no-brainer. Because now that 20%, his income is now 20% debt unencumbered, excuse me, right? It's free. It's not being weighed down by everything else. So I hope this was helpful for y'all. When y'all get a chance, let me know. Drop a comment in the section and let me know if this was helpful. Excuse me. If this was helpful. And if y'all are not able to sit and watch these shows live here, guess what? There's a podcast. So you can always find the podcast on Spotify. You could always find the podcast on Apple. I would ask you all to go to Apple I would ask you all to go to Apple and leave a review or a rating. All you got to do is Google the Finance Rebel Show. The Finance Rebel Show. So again, let me know if this was helpful, y'all. And by the way, what other topics do y'all want to talk about in these upcoming wealthy conversations? What's on y'all mind? What are y'all thinking about? Are y'all thinking about? Somebody asked me to talk about long-term care. I've sold a little bit of long-term care, but I'm going to actually try to find somebody to come on and talk about that with me. I haven't sold it in a while. I understand the basics of it. I got to have a conversation about it, but I'm going to try to find one of my FA friends, financial advisor friends, to talk about it. All right, so listen, again, if y'all have not listened to the Finance Rebel Show, y'all need to. Y'all cheating yourself. I just hit 3,400 downloads recently. So do me a favor, go listen, go like, go share, and comment as well as the videos as well. Like, share, and comment the videos as well. But again, let me know if these have been helpful. I haven't been able to get to everything here. All the comments, y'all know I love to interact with y'all. But like I said, I will try to come back and get into the comments and, text reply to everything. All right. So Priscilla says, thanks for sharing. All right. Thank you, Priscilla, for being here. I'm honored. Angela says, thank you for your gift to the community. Thank you. Thank you for being here every week, Angela. Appreciate you. Thaddeus, using insurance to shelter wealth. Okay. I haven't spoken about home-based businesses, but I will. That's a good one. Home-based businesses have a lot of tax benefits that many of us can do. Many of us need to be a bit more aggressive when it comes to our income. I know a lot of times we talk about reducing our expenses, which you should, but we should also be thinking about increasing our income as well, as much as possible. Why? Just for the simple fact that we can, right? Many of us have God-given gifts and talents, God-given gifts, abilities, and talents that we are not maximizing. So you're squandering your gift. Don't squander your gifts, y'all. Don't how's the saying go? Don't cast your pearls upon swine. So investing in bonds. Okay, we can do that. You think? I guess that's a basic one, but yeah, I can do that. I can do that one, Corey. I can do that one. So listen, y'all, like I said, I got to do my board meeting. I appreciate you all being here. Again, this is the Finance Rebel Show. I am Kamara Yellows. The whole purpose of the Finance Rebel Show is to make money simple, easy, and fun, to let you guys all kind of leverage and lean on my over 20 years of experience in investing, taxes, and accounting. So I've gotten to see all, or just about all. There's not much I haven't seen in this space. Don't know everything, but I've seen a lot. So do me a favor, share this with someone who is looking to leverage up or increase their financial IQ, because remember, the better you understand money, the more money you can make, and the better your life will be or can be. All right, everybody. Again, I appreciate you all for being here. Until the next time, I will be back tomorrow with getting jumbled up. The Black Wealth Project. I'll be back tomorrow with the Black Wealth Project at 7 p.m. and we'll be talking about some of our worst business mistakes that we've ever made. Again, some of our worst business mistakes we've ever made. All you got to do to find the Black Wealth Project is put it in the Google search or the Facebook search or the YouTube search. So come on over and hang out with us at 7 p.m. All right, everybody. Y'all have a blessed and prosperous and productive day. And I'll see you all soon. Have a great day, everybody. Bye-bye.